GE, some good news out of GE.
Some positive news, yes. They did see.
Yeah, I could say,
skeptical.
boy.
Did you get that? She really had to pull the teeth there.
They did see some stabilization in their power unit, which is hugely important to this story here. They turned an operating profit in that business, which has not always been so easy in the past. It is a slight uptick from the first quarter, and perhaps more importantly, they say that cash flow from power could actually be flat relative to that $2.7 billion burn last year. So that is a positive development. They're raising their guidance for the year. But a big part of that is because they're lowering their estimates for restructuring. And that sort of just doesn't jive with the narrative that we've been told that there needs to be more urgency on cost cuts. That, of course, was a big reason why John Flannery was ousted, is that investors didn't feel like he was moving quickly enough or aggressively enough in that power unit. And so it's interesting to see that being taken down. That was always going to be a second half weighted expense. And so I'm a little unclear as to how they get comfortable at this point in time that they don't need to make those cost cuts.
So I thought the big problem with power is they had all these bad contracts they'd inherited and they had to work through. They were losing money on, essentially. But is there a big move they can make in power other than trying to sell it?
No, I mean, there's nothing you can really do with those old contracts.
Yeah, exactly.
You're kind of stuck with them. What they are doing is they're trying to be more disciplined going forward. So on the new business that they write, they're trying to have higher standards and make sure that those are profitable. But I mean, it is sort of a situation where you have to ride this out to a certain extent, which is why they're focusing so much on the cost cutting side of it. You can offset some of that with better operations and cost cuts.
Is there anything to be said that the reason why the restructuring charges are lower is because they're actually ahead in their restructuring, or does it have to mean that they're not being as aggressive?
Well, that's what they're saying, but it was supposed to be second half weighted, and so I'm a little bit confused as to how you can be ahead if it was supposed to be happening in the back half of the year. The other big news today, of course, is that their CFO, Jamie Miller, is stepping down. And she was sort of one of the most visible remaining legacies from that John Flannery era. There had been, a lot of talk among investors as to why she hadn't left earlier. There were some that were hoping Larry Culp would clear house. I think he wanted the continuity and the stability to try to get his hands around this business. You're starting to see some of that take place, and that's probably why you're seeing this change happen now.
But that means if investors really did want his own team in there, they would take this as a positive because it was done sort of deftly, and sort of graciously, but at the same time, he's going to have his own CFO now.
Right, and I think, some investors were hoping he might bring that team in earlier in the process, but I do think, look, this is a very big company with a lot of very difficult problems, and I do think there was probably some value into keeping Jamie Miller around for a while so that he could sort of figure out what's going on here. On the other hand, it does make you feel a bit bad for John Flannery and Jamie Miller that they were sort of brought in to this no-win situation that, they didn't necessarily help, but they also didn't create. And so it's just sort of a difficult environment to be a CEO or CFO in.